Hello everyone and welcome back to another Trade Journal episode of my 2-hour MSB model where we are trying to get 1% better each day. You have probably heard it before. The beauty of any trading strategy is simplicity. Sounds magnificent, but simplicity alone doesn't win trades. So today let's look at 1 week of my MSB model and bring together the concepts of simplicity, consistency and the right mindset. What I can already tell you is that the results of my strategy were very positive, but more on that towards the end of the video. So let's break it all down and start with step 1. Simplicity. I've said it before and I'll say it again. You need above all a clear bias. Answer the question, what is your bias before you take a trade? And simply for that you should know, are you bullish? Do you think you are in a transitioning or ranging phase, or are you bearish? Depending on all of that, you may only take longs and shorts, or may only focus on short trades. For more details, go and check out the video I'll link to in the description. Zooming in and looking at the 2-hour chart of the US 500, which is the chart that I am trading currently, let's do exactly that, determine the different biases that we would have had throughout last week. For that, obviously, to make it more realistic, we need a framework. I assume you are a busy person and your chart time is limited, just like mine is. I have a full-time job, I have a family with 2 kids now, so I can't sit in front of the computer all the time. When will I determine my bias then? I am looking at a London bias, so to speak, focusing more on the time of the London session, which I try to come up with at 6 or 8 o'clock in the morning, always referring to German time, which is UTC +2. And later during the day, I also want to have a second chance of getting a trade in. And this is what I refer to as the New York bias, which I try to derive at around 2 o'clock in the afternoon. With our framework in mind, jumping back to Monday morning, the 26th of June, your bias, obviously looking at simple market structure, would have been bearish. No swing point had been broken yet. You would have wanted to look for a short trade. So let's mark that out using a simple red dot, bearish bias. Forwarding the chart a little bit, we can see that indeed this bias would have played out if you had been able to find an entry in the London session. Now, for the New York session, starting officially at 3:30 in the afternoon, so you want to derive a bias beforehand. Again, the bias should have been rather bearish, no swing point broken yet. However, you still would have wanted to consider one additional factor. Even so, the market structure at around 2 o'clock or finishing 2 o'clock, so 4 o'clock in the afternoon, was still bearish. You did take the lows, which obviously always is a sign that should make you cautious. Letting the chart play out a bit more, we see that even so we did have this feeling of being cautious, still market structure told us what we should be focusing on. Remember what I said, simplicity, consistency, mindset. So let's speed up the process a little bit to not have to run through the whole chart step by step. I've already prepared the chart here for us, but as you can see, sticking to simple market structure, overall you would have had a bearish bias in 3 sessions, so to speak, a transitioning or ranging bias, which would then allow you to look for longs as well as shorts in 2 sessions throughout the week, and overall also 5 sessions where you would predominantly or only have looked for long setups, which obviously if you look at the whole week would have worked out very well. Some remarks to put all of what I've marked out here into better context. As you can see, when waking up here in the morning, at the latest at 8 o'clock, you would have had to switch your bias to transitioning ranging, as market structure had been broken, and realizing that there was a fair value gap, even gap opening here on the chart on the 2 hour. This obviously would have been a high point of interest for you to look for longs. Same over here, you see I have marked out these lows, which then were spiked various times. If you are with the mindset of being in a transitioning ranging phase of the market, you obviously then want to keep in mind liquidity resting above you for a potential short trade as well as long trade. If you're looking at liquidity resting underneath, from then on out, Wednesday, Thursday, Friday would have been in inverted commas smooth sailing if you had known how to enter a trade. All of this then obviously brings us to step 2, which is consistency. You need to consistently know where you want to do business. To give you the highest probability and simplicity at the same time, as you can see, I mainly focus on my target boxes, which is the fib retracement between the 0.618 and the 0.786. And then obviously additionally, you have your rules. We've talked about the bias, and these areas of interest target boxes should be complemented by fair value gaps or liquidity runs. Meaning everything that we've talked about here on this chart, all the different biases for the different sessions that we have established, are only worth anything if you can combine them with clear entry triggers. By the way, if you found this content helpful so far, don't forget to leave a like, comment underneath the video. And now let's see whether you would have been able to enter according to your different biases. So let's run through the Monday trades together and then lay the cards on the table and look at the overall results of 1 week of my 2-hour MSB model. Obviously for that we should keep the rules in mind, and to frame our trade for our first session we would have realized that there was a 2-hour fair value gap resting here above us. Then obviously you also would have been interested in liquidity sitting at around 4,384, and again this bit of liquidity right above us is close to our target box at 4,369. Also, finally, make sure you have your potential target boxes that could be interacted with on the chart. As you can see, the first one was already overshot here, and the second target box higher up would have lined up nicely with this draw on liquidity and potentially entering this 2-hour fair value gap. As you always want to frame your entries on the lower time frames, my entry time frame being the 15-minute, this would basically have been everything you would have had to do in the morning on Monday to frame your trades and then look for a potential entry on the lower time frames. Letting the chart play out, this is what would have happened. Letting the chart play out until here, it becomes quite obvious that there wouldn't have been an entry on the 15-minute time frame during the London session for us. Why? As we can't be in front of our screens all the time, we rely on market structure breaks on the entry time frame as well, displacement down, or even if there was no displacement, at least a pullback back up to a potential target box with fair value gap / liquidity confluence before the real move down. We didn't get that. Should this discourage you? No. You had strong displacement down. You know there's potential liquidity not being attacked, resting above here and more above here. So what would you have done? You would have pulled your fib pool to get a idea for where a potential target box could be lying here, or if you pull it a bit further up, lining up nicely with areas of interest on the 2-hour time frame as well. And then you would have waited again. Let's forward the chart. And here you see it. When did this sweep that we identified potentially here already occur? It did occur at 4 o'clock. 4 o'clock is during your second session of interest. Remember, your 2 o'clock bias was bearish as there was no clear fair value gap to be identified lining up with a target box. I would have opted for a short trade going for the highs here, putting my stop above this second potential high that could have been rated. You remember, first target for my strategy always 2R, and as you'll see in a bit, the second target of 3R, yes, would have been hit as well. So what we do know is that our first trade didn't materialize. The second trade, a short, was a winner. Let's move on and again play the same game. Next day your bias would have been transitioning. However, as this didn't line up with any fair value gap nor were any longs swept, most likely your short trade here wouldn't materialize. However, you also would have looked for a potential long trade. Pull back to your target box, lining up with a fair value gap. The long would have been a winner. And you can backtest all of that going into our entry time frames, and you will see that all of the triggers according to our rules were there. Now, next long trade didn't materialize. Why? Because obviously we didn't pull that back far enough. However, our next bias established starting at 2 p.m. was transitioning again. If we have a closer look, we then realized that the potential short either would have been a loss or didn't materialize. However, the pullback following the push to the upside, taking out the liquidity here, would have resulted again in another winner. We can continue that game, and let me quickly sum it up for you. We have another market structure break, pullback to our target box, resulting in another winner. We have another market structure break, pull back to our target box. If you zoom into the 50-minute time frames, you find all the conditions, winner. You have another market structure break following the establishment of your next bias, pull back to, you guessed it, target box, and a winner. And you can play this game over and over again. Overall, what you can see is that not all trades did materialize. For example, this last trade here on Friday obviously didn't pull back far enough either. However, overall, you have spectacular results. Coming to a conclusion, where does all of that leave us then? Overall, if you look at the results, you can say that you would have looked at 12 potential opportunities, as each transitioning ranging period gives you 2 options for taking a trade. Out of these 12 potential opportunities, you would have looked at 6 wins, 1 potential loss, and 4 trades that simply never materialized, like the one that we have looked at here in detail. The final result for last week would have been a potential win rate of 85%. I say potential, and I say it on purpose. Why? Because don't forget about step 3, the mindset. Do you believe in and do you follow your strategy? At the beginning, we said you need a simple strategy. Simplicity is king. That, however, means that If your bias is supposed to be bullish, you have to go for the bullish trades. And the same goes for bearish / transitioning or ranging. And if your trades tell you to take the trade, you have to take the trades. Even if, for example, in this instance here, you would have thought, uh-oh, we are going to go a lot lower. That's it. That's the top. We have spiked the highs, we've taken liquidity, and so on and so forth. Trust your strategy. Do I expect you to believe me? I hope so, but I don't really expect it. Go through my strategy, look at it, follow it, backtest yourself, and you will see that the potential is there if you develop the mindset. Fact of the matter is, there are enough opportunities for all of us to make it and become a successful trader as long as we have a clear strategy and the mindset. If you want to support me and my work, then please subscribe to the channel, share my videos, and with that, thanks a lot for watching. Until next time, bye bye.